Everyone, welcome. I'm Mortgage Mark, and today with me I have Kent Linoff. Kent owns a property management company, and if you're an investor or thinking about becoming an investor, we are going to cover what a property management company is, what they do, why you need them, and somewhat not just a commercial for Kent, but telling you what he and his companies do better than others, so that you know when interviewing folks and looking for folks and looking for opportunities for people to manage your properties, you'll know what a good one does and you'll know what a great one does because there is a difference, and I think that is so important. And in my experience, I won 16 rental properties. Caroline and I owned them for about 15 years. Sold them all at the end of COVID. We now put our investments in real estate, just different matters, but I'll explain that more later as we go through this. But today with me, I have Mr. Kent. Kent, let's do a quick elevator pitch. Give me the 30-second overview. Who are you? How long you been in the business? Who you work for? What do you do? And hit me with the elevator pitch before we get into the down and dirty.
Sure. Thanks, Mark. Appreciate you having me on here. My name is Kent Linoff. I am the senior property manager for Real Property Management Legend. We are based out of Farmers Branch. We focus on single family residential properties, and we want to be your white glove full service property management company. When it comes to dealing with tenant placement, having those challenging negotiations, maintenance at all hours of the day, as well as keeping up with city violations, HOA codes, and things that could be really challenging for people. And what we want to do is we want to help busy professionals get into the investment market without having to take time out of their busy lives, whether it's their W-2 jobs, their families, their pastimes, their hobbies. Enjoy those and let us handle the day-to-day grind, so to speak, of managing your investment.
And again, I can endorse everything you said as far as the why you need it. Again, if you're thinking about investing in real estate, or if you are an investor already, if you are one, you know the headaches that can come with just managing your own properties. I will fully admit I did it for a number of years. It was not fun. And honestly, some of it at the time was ignorance. I didn't know. We're talking back when I was in my
Mhm.
20s. I didn't know property managers existed. And then when
Yes.
I did try them once or twice. And I thought, man, they're not worth it. But the worth piece, it equates to value. So everything you just kind of gave is an overview. So Kent, let's talk about, you know, I didn't have the right property managers. I can tell you right now, again, now that
Mhm.
I'm 20 years, I'm in mid 40s at the moment, so 20 years wiser. You do get what you pay for in life. Unfortunately, that's not true in property management, because I think you tell me, Ken, what is kind of the normal range of what property management pays? And the reason why I say it's not, you don't get what you pay for, is because I paid the same amount that I know Ken's answer is going to be. I paid the same amount and had significantly inferior service compared to what's out there and available. So it is about finding the right person, and you don't. This is what's weird about your industry, Kent. You don't have to pay more to get more, which is really weird. So let's talk about just kind of the base cost of what it'd be if I'm an investor. I just bought my first, close with the Mortgage Mark team. We bought our first rental property, or whether it's our fifth or first. What does a typical, kind of what's that baseline cost? And then what's included in that cost if somebody were to hire just generic property manager? What's that look like?
So if you're looking for baseline costs, and to your point, what you said is yes, you do not always get what you pay for. I will also say to that is you can, if you get too carried away with finding the lowest price option out there, you will the cheaper options you almost always get what you pay for. The most expensive
Oh,
options don't necessarily
that's well
follow
said.
through.
So I
So just so you know, you don't. It doesn't have to be expensive, but if you're out there shopping and they're giving you a deal that sounds too amazing to be true, it probably is. But in general, within the DFW market, you can see a broad range of anywhere from initial leasing fees, which is the fees that cover uh, the aspect of going out, marketing the property, doing the showing, screening the tenants, and getting the lease executed with all the I's dotted and T's crossed. That's typically anywhere from 50 to 100% of the first month's rent. It really just kind of depends on a lot of it depends on what your rent rate is. Obviously, there's margins that need to be met and base costs that are common to every property. On average, I would say we look to be around 75% of that, and that's regardless of whether it's a 1 year lease or 2 year lease.
So
And then
just
I
to
have
be
this,
clear, yeah,
sure.
let's use real life examples. And I don't know what the average Dallas Fort Worth rent is or rent wherever they're in the country, but let's just say it's $2,000 a month because that makes math really easy.
Sure.
So if I'm an investor and I own the property and I'm going to ask Mr. Kent here to manage the property, I
Mhm.
just closed today. I now need to get a tenant, right? And that's the part where Kent was saying that as far as the marketing, how do you get the tenants, and then how do you put it out there to let the world know it is for rent. Once you do
Mhm.
have options with people coming in saying, I want to rent, you have somebody that screens them, pulls their credit, does the background check, validates, whether they're good people or not, and then ultimately helps negotiate, sign, and do the contract for the lease, get all that stuff done. That is what a property management company does. And to Ken's
Correct.
point, it can range from about 50% to 100% of that first month's rent. So let's say it's
Yes.
100% because that's easy math. If your
Sure.
rent
Easy
if
math.
your rent is 2 grand, you're going to owe 2 grand. That first month rent goes to the property management company for facilitating all that. And just to be clear, they don't always
Mhm.
get to keep all that because if there's another agent on the other side or something of
That
that
is
nature, they're
100%
splitting
correct.
that commission. Think of it like a list, think of it like a realtor's commission, because essentially that's what it is. Some of that could be going to the other side. I've always paid the 1%, the full or the
Mhm.
full 100%, the first
Yep.
month's rent. That's my opinion because that's
Mhm.
what's going to get you the most visibility. Because if you start discounting
100%.
commissions to the realtor community,
You
they're
slow
probably
it
not
down.
going to show your property. So
No.
I personally recommend the 100%. Kent, you said you guys land somewhere around the 75% on average, depending on what it is.
Correct.
I will advocate. It goes back to what I said, both correctly and incorrectly at the same time. You do
Mhm.
get what you pay for. Pay the 100% first month's rent and get the most tenants and the most options in front of you. So that way you have the best pick of the litter, as opposed to one of the good ones may not have been shown if you're trying to discount a realtor's commission. So I would do the 100% first month's rent for sure. Okay. So we now got a great tenant, Kent. You've done all the homework. You've done the background checks. You've told me, hey, the Smiths are going to move in. You've handled all that. I don't do anything. You just do all that. I get to make the decision of thumbs up. I like the Smiths or the Jones or the whoever's. They're now in. Then what does it cost me as an investor to just do that ongoing maintaining piece?
8% a month is about what you're going to see. If we're using a $2,000 market rate or market rent rate, you're going to like 8% a month of the gross rents collected for the property.
So I've always
And
heard
that's
10.
going to
Is 10 on the high end, or is that
10,
just
10. So you'll see a lot. And again, 10, 10 is a little bit on the high end. That's sort of the top of the market right now. And you'll see that. And again, we have properties at 10% that are usually lower income, right? Because the unfortunate counterintuitive scenario is when you have a fixed base price, which we all have a fixed base carrying cost to it, when you have lower rents, we can't discount that percentage as much. But when you're up 2,000, 2,500, it's easier to work down to that 8%, things like that. And there are some companies out there that are going to try to do a flat rate charge, but those tend to get the changed a lot. We find that partnering with our company and partnering with a percentage based rent fee structure means that when the market's booming, we're being more successful. You're being more successful. When the market has sort of been depressed, we just had an owner who had to take a fairly significant step back on their rent on a property up in Sherman because just the market climate had changed with inflation. So we also took a step back with them, and that's more of a partnership we feel than just going. This is what
so?
it's going to rent at.
Yeah. So to recap, I heard 10%. That's what I tell our clients. But it sounds
It's a
like you're like
national
the
average,
mortgage.
I would say.
You're like the mortgage business, and I think the smaller the loan amount, you'd think the
Mhm.
better deal you'd get because you're putting down
Yep.
80%. You're only financing 100 grand on a $500,000 house. Not the
Mhm.
case. You're actually going to pay more because at the end of the day, percentages aren't deposited into bank accounts. Dollars are. And so at
Mhm.
the end of the day, there needs to be a dollar minimum that says like I have to have this many dollars as a company to make sure there's profit and
For
covering
sure.
overhead. And so that's why the range can be, bigger. The bigger the rent, you don't need to take as much. So therefore, you don't take 10% of a $4,000 month rent.
Mhm.
So the
Yes.
8% number sounds good. I would just tell you if you're interviewing different property managers, don't I mean 8% of this the grand number we're using for today is $160 versus
Mhm.
$200. I wouldn't let that $40 difference be the difference between trying to cut corners. If Ken, I mean, congratulations for being average of 8, but the reality is if somebody's going to save you an extra $40 a month, if you're worried about the $40 a month on an investment that's hundreds of thousands of dollars,
Mhm.
you may need to reevaluate whether or not you're
And
doing the
that's what I
right
was,
thing of investing.
and that's a great point, Mark. What I always tell everybody when they ask about, well, what about this? And I said, I want you to understand and look at this. If your home, let's just say it's a $500,000 home, $500,000 home, $500,000 investment, $500,000. If you're turning that over, a financial advisor on average is going to charge you about 1% a year to manage their portfolio. If you take 8% or even 10% and you actually do the math, somebody is managing, and it's not just a passive management, right? It's not just a little bit. There's active engagement, there's customer engagement, there's cash flow, there's a significant amount of accounting that goes with that, along with dealing with maintenance and maintaining the property. All of that's being done for well less than 1% of the value of the property year over year. So when you look at it from the standpoint and look at it from an asset management standpoint, it's actually a pretty good deal all the way up to 10%, whether, as long as you're getting value out of it. And I know one of our biggest things, we see a lot of clients come to us for communication. You ask about things that we believe that we do well. It's communication, it's answering the phone, it's providing feedback, it's getting back. We can't always control what's going to happen with property. Mark, you know as well as I do that. I don't know if you've ever had this story, but I was once self-managed my own properties. And I was stuck in the middle of Lake Travis on a boat with friends from out of town dealing with a plumbing issue at a house that I had in South Austin. And so it really ruined for me about 3 hours of the day because I was constantly trying to deal with a fairly significant issue going on, and it took away from my enjoyment of the Saturday on the lake.
Yeah, so that's
And
just to be very clear, the that is the benefit of the ongoing management piece, right? So even if you do
Mhm.
self-manage, what we talked about for that upfront fee, that 1% of or that 1 month's rent, whatever it was, I that's to pay to get somebody in there. Even if you self-manage, more than likely you're paying that fee to get somebody in the home, right? Between the
Mhm.
realtors and whoever's helping you do that stuff, that's more a lot of times that's paid. The
Yep.
ongoing piece. And just to be very clear, when we say 8%, we mean 8% of the month's rent. So in our
Mhm.
example, $2,000 times 8% is $160 a month. So whatever the
Correct.
rent is, Kent and Company or Kent and Co. or property managers getting 8% of that month's rent is their fee. But to the point, the leaky toilets,
Mhm.
the late night phone calls, the this is happening, the that's happening, the whatever it is, that's all going to Kent and his
Mhm.
company compared to you as the property owner. And in addition to that, um, the fixing of said problems is on Kent's shoulders and fixing it with the right contractors. And this is the benefit they have too, is as a professional who does this for a living, they know the contractors that are going to be fair, going to get the job done right, getting taken care of. So the ongoing property management piece is so huge. And I'll challenge you on that 3 hour ruined your 3 hours on the lake. Man, there are some instances where we've had it in our experience with Caroline and I. It'll ruin your day, if not your
Yep.
weekend, and potentially your week. Because at the end of
Yes.
the day, when things don't go right, a lot of times humanity doesn't show the best version of themselves. I'm not saying they're bad
No,
people.
unfortunately, they
I'm just
don't.
saying they can get nasty. And so
You have
you go
some.
from what was a rosy relationship, suddenly now you got problems. And this is the part where you take that not just the day-to-day activities off, but the emotional stress that goes off and to know that it's taken care of. So that's the ongoing piece. So now part of what you hit on is what I want to start diving deeper. So that is property management as a whole. So as a
Mhm.
whole, you can probably get somebody out there to do it for, I bet there's a 6%, I'm making that up, 6% to 10%.
Oh, absolutely.
So
You can find flat rate people that'll advertise $99 a month or any number of things, but you'll find when you look through it, there's going to be another a roundabout way where things can be made money. I know a common one for some of the really big companies out there. What they've basically converted into is they have lower fees, but they created and I don't know if we know it's maybe too much for this, but they've basically converted themselves into a maintenance company that has sort of um, a captured market. You have 13, 14, 1,500 doors. There's a place out in another city, and I'm not going to go into because they've got a great, very inexpensive upfront cost from a leasing and management standpoint, but they're doing maintenance in-house and they become a maintenance organization that has captured properties, and you don't really have a choice with who you're working for. So they're motivated to drive maintenance business as their primary revenue builder. So just understanding, the most important thing from our standpoint is we don't want to spend your money. Good property manager out there trying to spend your money to pad their books. They're trying to make sure and maintain the property in its current most marketable condition. while keeping the tenants in place. And sometimes that's understanding a little bit of money here to keep your tenant renewed and continuing to pay rent is makes good financial sense. And a good property manager will sit down and help you weigh the pros and cons of that, instead of just going for whatever the short term, you know, lump change charge is.
Well, I think
Uh,
this is the part where you used the word already a couple times, which is partnership and partner. And
mhm,
this is what initially attracted me to you when we first met and we were chatting is, and having been there, it's to have that solid consultant, to have somebody who knows like this is an industry, not just the
mhm,
industry, but knows the market, right? Because you manage so many homes in this concentrated area that is North Texas. It's valuable to have somebody call you up and say, "Hey, man, here's hey, property owner, this is the concern of the tenant, and
mhm.
here's the band-aid fix, and here's the permanent fix." And those are two different numbers a lot of times, and
Yep.
they can be very drastically different numbers. So the question then is, which one do you want to do? I can fix it to where we're fine for today, and maybe this lasts
Mhm.
for a year or two, or I can do it right and fix it the long-term way, so that we don't have to mess with this for 6 or 7 years. Which one do you want to do? For example, the part of a dishwasher. Do you want a new dishwasher or water heater or whatever?
100%.
What do you want to do? And so then that's where the advice comes in and the consultation comes in from your side to say, look, and maybe it's paint, maybe it's landscape, maybe
Mhm.
it's all this stuff to say based on the market, where this is, where the rents are, what we've seen, I would recommend the Band-Aid fix right now for these reasons.
Yeah.
I'd recommend the permanent fix for these reasons. Now, again, as the homeowner, the investor, I get to choose which option we pick. But at the end of
Mhm.
the day, to have that counsel, to have that consultant, to have that partnership is so important to where guys like Ken can come in and say, they know what to do. Here's what they would do and why. And again, if you're financially able to take their advice, do it. Now, sometimes
Yes.
that band-aid fix is what you have to do because just financially that may not be the
Mhm.
position you're in or where you want to spend the money right now. But I think that is so important. And that is one of the things that again, it goes back to the original thing. Like what blows my mind is you do and you don't get what you pay for. You don't
Yep.
overpay like for the extra service, for the great piece. What Kent just said,
Mhm.
interview, when you do the interviews, ask the right questions. What do you do? What's your structure like? Because this company you mentioned, what Sean made nameless, if they're a big
Mhm.
company and they're really just a maintenance company, obviously
Mhm.
they're going to have very different goals and objectives to make their money than someone
Totally.
that is the true partnership. Because when you succeed, Kent succeed. So what else, to elaborate on that, or at least some other stuff that you do? What do you think? Now, this is the commercial part, guys, but it's not necessarily a commercial for Kent. It's a
Sure.
commercial for guys and gals like Kent that do property management. What do you do different that you think is beyond the normal? So aside from the consultation and the advice, because that's hard to prove, what are some of
Mhm.
the examples you have that say, hey, here's what we do on a regular basis that I think is above and beyond the norm that you may not get from somebody else that charges you the 8 or 10%?
Gotcha. Well, one of the things that's important that is owners don't see. So we work for owners as clients. One of the things that is incredibly important that owners don't necessarily know or have visibility to is how we treat the tenants. The tenants are our customers. The tenants are the ultimate source of revenue for your property. They're our source of revenue, they're yours. And understanding like you can be very happy that I am owner driven, but understanding and making sure that we have good tenant communication for high tenant retention. National average is about 18 months for a tenant, which means every 18 months you're moving people out, doing a little bit of make ready, going back on market and doing things. On average, we're somewhere around 2.5 years. So our tenants stay in place, and that's weighted because we have some 6 month and short term properties that we manage for insurance claims, that we're reducing. So we're averaging for our long term rentals 2.5 years in place, which is what we want. Our tenants are happy, um, and as you said before, not every tenant can be unhappy. We're coming to the unhappiest time of tenants in Texas because it's summer and nobody likes it when their AC breaks. And it doesn't matter how quickly you get out there, it's never fast enough. I can assure you on that one. But
Well, I want to go back to
but
those numbers real quick. So just
sure.
that 100% first month's rent, whatever it is,
Mhm,
right? When you first get a tenant in there,
mhm,
18 months later, if that's the national average,
mhm.
18 months later, you're again as an investor giving up that 1% or that 1 month's rent to get a new
Correct.
tenant in there. Every time a new tenant comes in, you got to do that. Also, almost I'll say this every time a tenant leaves and a new person comes in, you're spending other money to fix up the house. It could be only a couple hundred grand or a couple
Mhm.
hundred grand, a couple thousand bucks. It could be many
I hope
thousands of dollars. So, but at the end of the day, it's like, oh, I got to put a fresh coat of paint on, get new carpet, things like that.
Mhm.
Versus if somebody's in there instead of the 18 months and they're there for your average, the 2.5 years, you're buying yourself an extra 6 months to a year that you get
Yeah,
to postpone those costs. That is massive. And that's a stat that's real fact. I mean, that's not like a fuzzy, it feels good. Like that
no,
is fact. I mean, the fact
very
that
much.
you to treat the tenants great. Look, I'm happy. I'm a good person. I want other people to treat people with respect. I don't care. But as an investor, that's my bottom line. And that is real money made. And I promise you that 8%, the 160 bucks, it all pays for itself if you get a tenant to stay in there an extra 6 to 12 months. It is paid for at that point, so you can delay those costs. So that is huge. What else? I know there's something else you told me that I thought was real surprising. What else do you guys think you do better or different than kind of the typical property manager?
I mean, at the end of the day, I don't know. Everybody asks about what we do different. I think what we do different is we just actually do what's best for the owners. We work towards the owners. And if that means we have a deep, difficult conversation about based on their financial setup or situation, if it makes sense to liquidate, we talk about that and we help them find somebody to help them get rid of the property if that's what makes the most sense for them. I'm not going to try to trap somebody and keep them in just for the sake of our business if it's going to, you know, bring challenges to them that are more difficult they can't simply support.
Well,
Uh,
and
you
it
know,
hit that. And that's what I was thinking of. Like you and I were talking how you'll give advice to say, look, Mr. Mrs. Investor,
mm,
the reality is this home is coming due for deferred maintenance.
yep,
Right at this point, to stay with market, to get the premium for the
mm,
rents, we're going to need to spend a ton of money to upgrade this to make it better because it's now those countertops you put in 7 years ago are
mm,
now getting outdated, or 9 years ago, or the carpet, the floor, whatever. So you will absolutely, and I know you give me this example, you'll advise them, connect them with somebody in real estate to say, hey, here's a fantastic
yep,
real estate professional. Let's sell this. And instead of paying taxes on it, let's do a 1031 exchange and maybe go buy another property or two, right? To where it's like you
yeah.
really help manage their portfolio and have their best interest. And the other part that I thought was real interesting, correct me if I'm wrong, you actually go and visit the property on occasion. Is that true? Because I've had properties where,
No,
I never went
absolutely.
out there, but how often do you guys and your team,
No,
how often do you go out to inspect
we
the
do
property?
when the property's vacant. We typically go by every week. We want to go by at least once a week. There's a couple reasons for that. A While it's not a common thing, squatter issues can occur. So making sure we're checking on the property on a regular weekly basis ensures we don't have that problem. B, homes are never more uh, vulnerable to damage. Small things become big things very quickly when nobody's in the home. I personally had one of my own flips flood out over Super Bowl weekend in February of 2020. I was less than a week ready to go on market. And I walked in on a Monday morning, and the entire downstairs was flooded with hot water because the uh, water line in the kitchen island broke and flooded. So checking those properties on a regular basis. Once we have tenants in place, we will do walkthroughs at least every 6 months. These are detailed walkthroughs. We take photographs, we look around, we make notes to see what's going on. Because what happens is tenants will report that their garbage disposal doesn't work, but what they won't report is there's a crack in the corner of the window frame upstairs in the back bedroom that nobody looks at because it doesn't affect their quality of life, but it could affect yours. It could have it could be a small, minor indication of a foundation issue. That foundation issue could be just foundations because it's Dallas. And as we know, we're sitting on a giant bed of clay throughout the DFW Valley, so to speak. And it's not a matter of if, but when you're going to have some foundation experiences with your home. Or it could be signs of a slab leak. We just dealt with that and we're able to get it resolved quickly. Where a slab leak under the kitchen was causing some movement. And we were able to kind of see that because of the water bill shift that the tenants reported. And then we got that resolved fairly quickly. There's a lot of different reasons why you want to be in your property, just to make sure. And the last is simply making sure the tenants are taken care of. Not, not. I always tell we don't necessarily care that the tenants are tidy. We need them to not be unhygienic. And we don't want to make sure they're not doing anything bizarre like running running some sort of halfway boardroom and they're renting out the rooms and things like that. And that's where these inspections come in.
Yeah, and I think that's so huge because again, I didn't, and that's where later in life I realized that, man, what a mess up. Then they come for lease renewal and you just renew it
Mhm.
thinking, oh, they must be
Yeah.
fine. But to your point,
Yep.
we had somebody not far from one of our houses had a meth lab in the house. Like, oh my gosh, like imagine that. Like that is,
Mhm.
we had one tenant where we didn't find out till too late when we had to evict them. And that eviction cost me, I think, close to 22 grand. And that was on a $150,000 home. And this is 10 years
Wow.
ago, but it's because they had like nine dogs and they were supposed to have zero. So
Mhm.
again, you going through to be the eyes and ears, it doesn't have to be every week. I think 6 months is
Mhm.
wonderful because now, at least to your point, we're
Sure.
not looking for somebody who vacuums every day and cleans. It'd be nice if they did, but
Mhm.
the reality is
Sure.
you're looking for the condition of the home to make sure we do have good quality tenants in the home that are taking care of the
Mhm.
property or noticing the things that they just don't notice. They're not homeowners. They're not looking for those cracks. So if you
Mhm.
give us slight movement and to get one or two pure beam or foundation fix to be done versus an entire massive problem with a sewage line break. So we had that happen three different times in our world.
Oh wow.
That's just
Yeah, those
that's
are
a
never
30 to
pleasant.
$40,000 mistake, right? And it's to say like this is what good, proper, regular maintenance can do on a home is
Mhm.
prevent all that. So at the end of the day, again, I'll endorse Kent all day, all darn day, but I would tell you from a property management piece, I think property managers, they get a bad rap in terms of like, oh, I don't want to pay 10% just for somebody to do nothing. And that's
Sure.
unfortunately true. And I think that's a lot of the industry, in my experience, has been
Mhm.
just you pay the 10% and you get the typical what you'd expect is that, they handle the leaky toilets. But to have a
Yep.
true partnership, to have a company whose culture and foundation is built on doing it right, I think those are the parts that you don't know until you actually experience it. But talking to somebody, how they answer it, the examples they
Mhm.
can give, the fact that you're a business person and you have the stats, you know what you're doing. You can sit there and say, here's what we've done for so long, here's the team and the process. I think that's the part that you look for in a property manager. And I think that's what attracted me to you, Kent, for so quickly, which was like, I've been there, I've done it, I've lived it. And had I do it all over again, I wish I'd have known you 20 years ago when I started the process, and it might have not, I might still be in it. My wife ultimately took over doing the property management, and
Yep.
she's much better at it
You
than I
said
am. But to have somebody like you would have made for a little happier marriage and happier times investing for sure. So with all that said, for closing remarks, Mr. Kent, is there anything else that we haven't talked about or touched on, or something you want to drive home for the final thoughts here?
the biggest thoughts I always say is if you're looking to get into property management or looking to get into property investment, you haven't bought a home, talk to a property manager first. Um, to understand what makes a good rental and where, so they can give you a little bit of guidance on things to look out for. Because the goal is you need a property that is going to give you the best return on your investment, basically, and $10,000 upgrades that you might be willing to purchase in a home because you love it for your personal belongings aren't necessarily going to translate into, you know, $10,000 worth of increased rent over any time, on a reasonable ROI. And if you've already got the property, if it's inherited property, something that we're happy to work with you, we'll certainly do our best. But if you are in the market actively looking, use our sales agent. We always recommend that. I am too busy managing our portfolio. I would not be a great sales agent, but I'm always here to listen to anybody who has questions about it and provide whatever feedback I can and guidance on finding a property that's going to turn into a good long term investment.
Well, I
And
think we
just
just
do
figured
that
out what our
before you
next
get out
video
there.
is. Yeah, our next video has now been determined, Kent. You and I are going to do another one very soon. I don't know what your
What
schedule
makes it
looks
good?
like about what makes a good investment property because that is so true, and I didn't think about that. I mean, I know it, but it's just not on my
Mhm.
forefront. But absolutely, when somebody says
Yeah.
they want to buy an investment property, I would absolutely. And I'm going to tell the team we're going to build it into our process for the mortgage mark team, Kent, that says like
Mhm.
if we got an investor that's coming in new. And
Yep.
even somebody that owns one, they need to call you because you know the areas of town where there's a lot of issues with the foundation. You know the areas of town that rent well, that don't rent well. You know probably almost better than appraisers. Because when we do a loan, for those that don't know, for the buying investment
Mhm.
property, we do a rental analysis. The appraiser does. And we order that. And they do their homework, but they see stuff that's on MLS. And there's a lot of stuff that doesn't happen on MLS. And
Yeah.
Kent and people like Kent would know that because they manage the area. So that is
I will give you a
critical.
perfect example. Sorry, because I know we're trying to wrap up, but one of the big things, and this is not, it's about staying, I'll say staying in your lane and but being expert. We had somebody brought us a 1 bedroom condo, and it's a really cute condo. And they were basing it off 1 bedroom apartments in the area down in the Addison Galleria, 13, 1400. Yeah, I'm going to get that. I was like, well, I understand these are the comps that you were given, with your sales agent based on the area. However, this is an 80s style condo. Um, you don't have a gym in there. You don't have you're not it's a condominium. They're not throwing the lifestyle parties and the happy hours. And most importantly, your unit doesn't have washer and dryer connections inside. You have a common laundry mat on site, which means people walk out. And that was a huge deterrent. And I explained like this is a thing that is a turnoff. And to be blunt, certain people don't feel comfortable taking their laundry and walking out at 8 o'clock at night and having to go do laundry in a dark, laundromat on site and walking back and forth. It just doesn't make people feel safe. So things like that are really important, and you're not going to get that unless you understand the rental market.
Million percent. And I'll tell you this, Kent and I met through an amazing realtor. And so I think that's the other part too, is the sooner you talk to somebody, mortgage, every single day
Mm-hmm.
we deal with realtors. Kent on a regular, every single day deals with realtors. Connecting with that, as you call them sales agents, I'm going to call them realtors. They're
Sure.
the same thing, right?
They are.
Same person. It's
Somebody
like
who
anything else.
specializes in it,
Get with a
because
good
I'm
one.
a
And
realtor too.
yeah, realtors. But the reality is, most realtors that I know, because again, for a living, right, as a mortgage
Mm-hmm.
person, most realtors I know, when they do the leasing, it's usually as a side, like they do it for a friend or family, or they could just use
Mm-hmm.
they get that extra cash, but that's not what they
Yep.
primarily do. Their main focus is buying and selling homes
Mm-hmm.
because the commissions are significant. It's not 1 month's rent that can equate to,
Sure.
$1,000 if they get 50% of that versus selling a $400,000 home at 3%, they make
Sure.
$12,000. So at the end of the day, their primary focus is not on
Mm-hmm.
leasing homes to people,
Mm-hmm.
most of them. And so I would tell you again, talking to someone like Kent, not to say that these are bad professionals that can't do it, but talking to somebody
Mm-hmm.
that does this every day, property manager that you get on the forefront, you at least can fact check and make sure, because from the realtor standpoint, what Kent just described with the condo, whoever that sales agent is, maybe they bought that condo at a steal. Maybe that condo is going
Yep.
to appreciate like crazy. Maybe they got a
Mm-hmm.
great deal on it, and there could be a financial upside for sure. However,
Sure.
they may not know that the rentals and how to
Mm-hmm.
properly analyze that monthly piece and the cash flow that comes from it, that may not be the fit. So you got to take both parts into consideration. It's so huge. Ken, I appreciate you, my friend. Like I said, we will do a follow-up video of what to
That
look
sounds great, Mark.
for before you buy a home. But thank you again. And if people want to get a hold of you, Kent, what's the way to do that?
The best way to get a hold of me is that you can call our office number at 214-227-2404, or just reach out to leasing at rpmlegend.com. And that's just
Wonderful.
leasing at rpmlegend.com.
And what's that phone number one more time?
214-227-2404.
Fantastic. And we will put that wherever you're going to see this and watch this. We'll make sure you got Kent's information. And again, is this a commercial for Kent? No, but it's really like going to tell you should call Kent? Yes. So again, thank you for watching. If you guys got questions, I'm Mortgage Mark. You can go to mortgagemark.com. Kent just gave you his information. Thanks for watching. We'll see you again on the next one.
All right. Thanks, Mark. Have a great day. Bye.